Good morning. Hello. Oops. I got a mess going on over here already. I am severely right-handed and I had the nerve to have my tea. It's a tea kind of morning on the left side. That was not going to work out very well. So I'll give you a moment to get on. Oh. Is a fabulous day today. I'm super excited. So if you're watching the recording, feel free to skip ahead about a minute or so to get to the content. I do post these on my YouTube channel as well. So if you're watching on YouTube, thank you very much. And you can skip ahead too, but make sure you subscribe so you don't miss anything. Y'all see up there on my ceiling, my smoke detector started chirping, so I had to take that down. I got to change the batteries in that. It's that time of year to change the batteries in the smoke detectors. So we're usually pretty on it with changing the batteries in the smoke detectors, but just not this time. Good morning. Good morning. So yeah, after I get done, that's the first thing I got to fix is get my smoke detector back up in my ceiling because it's driving me absolutely bananas. Okay. So let's get down with the get down. Good morning, Arvella. I don't know if I said good morning, so good morning to you. So if you're looking for some travel help, Miss Arvella is your girl. And I have been a terrible, terrible client because I can't make decisions over here. It's tax season. So at the time of this recording, it is tax season. So I'm blaming it on tax stupidity. Okay, so let's get down with the content for today. So again, welcome to the show. My name is Lysandra Everett. I'm your host, and I am here Monday through Friday, 9 o'clock-ish. When you tune in my show, you're going to hear about lots of things. Right now, you're hearing about a lot of tax topics because it is tax season and people got tax questions. And that's what I'm here for, to help answer tax questions because I am a tax professional. Today's topics, estimated tax payments. What the what? Okay, so estimated tax payments. Let me get a sip. Hold on. All right, what are estimated tax payments? All right, so let's put it into context. For people who work a job, good morning, Michelle. For people who work a job, their taxes are withheld and sent to the IRS, okay? So whatever income you earn on a job, it's taxed and that money is sent to the IRS, okay? So, but there's also other types of income that are not subject to withholding, such as your self-employment income, business income, rental income, interest, dividends, okay? All of those types of income are not subject to withholding. Well, if you have that type of income, you may be subject to estimated tax payments, which means that where most people file their taxes once a year and pay once a year, the IRS wants to hear from you just a little more often. To be exact, 4 times per year. So let's go with those dates, okay? So there are, again, 4 equal payments. The first quarter payments are due April 15th generally, as in like for 2017, our tax deadline is April 18th, but normally it's April 15th for January through March. Now the second quarter gets funky because the second quarter covers April and May, and that's due in June. And then the third quarter is June through August, and that is due on September 15th. And September 1st through December 31st, that deadline is January 15th of the following year. Okay, so 4 equal tax payments. Now, that's the big question. Who has got to pay these estimated tax payments? Okay, well, it depends. It depends on your liability. So here we go. So as a general rule, if your tax liability is $1,000 or more, you are probably going to have estimated tax payments the following year, which means that if it's $1,000 or more, you're going to have to make 4 equal payments of $250, per quarter to cover that estimated tax payment. Now, for self-employed, for my home business owners, I'm your home business tax lady, okay? For my home business owners, generally the $1,000 rule applies to us, okay? If you're filing a Schedule C, sole proprietors and independent contractors, if you owe $1,000 or more, 9 times out of 10, you're going to have estimated tax payments. Now, for my folks that have S corporations, C corporations, or one of my corporate type people, if your tax liability is $500 or more, you're going to have estimated tax payments. And just for my regular people, you're saying, look, I'm not a business owner, or anything like that. Okay, well, guess what? You're not out of the woods either, because if you continually owe, then the IRS is going to have you make estimated tax payments throughout the year. Either you're going to adjust your withholding to start having more money taken out, or you're going to make estimated tax payments. A lot of people, I had this set of these were twin accountants, okay? And it took me about 3 months to realize, okay, no, there's two of them, but they were identical twins and they were both accountants, and they both were single and, and had six-figure jobs. But instead of them making, estimated tax payments, they had more money taken out of their checks, so they didn't have to make estimated tax payments. So, at the end of the year, they generally wound up owing about $500 or so. It was something minor, so they could just write that check and keep it moving. But so that is an alternative. If you are a higher income earner, you may not have deductions. You might be a single income, it's just no deductions or anything like that. Then it might be in your best interest to have more money taken out of your withheld for taxes, so you don't owe as much at the end of the year. All right. So what's the deal? Okay, a lot of times people, and especially when people are new in business, it's at tax time, they get that, holy cow, what do you mean I owe the IRS? Okay. And, and then wind up having these estimated tax payments, because when you go to file your taxes, then if you wind up owing more, they will actually print out your estimated tax payment vouchers for you to send. So you have them throughout the year. So when you walk out, okay, if you're gonna owe estimated tax payments. And it's funny, but it's sad, because a lot of times our business owners don't understand, especially in the home business industry, which is why one of the main reasons I became a tax professional, because there are too many people. Business is easy to get into. People tell you how to make the money, but they don't tell you how to run the back end. They don't tell you, hey, if you go and ball it out, which we expect you to do, then you're going to owe taxes. So you can't go and just spend all the money. You've got to set aside a portion for your taxes, so that at the end of when you go to file your taxes, if you owe, you have this money available to pay the IRS. So there are a lot of home business owners that get in trouble and then also wind up with estimated tax payments, for the following year. And it is really a baptism by fire, and people walking away feeling very disgruntled by not knowing this information. So what's the penalty? Because there are some people that completely ignore estimated tax payments. That is not a good idea. All right. So if you have estimated tax payments, there again, you've got specific due dates. The penalty is, it's not an across the board. It depends on how much you owe and how many days you're late. So your penalty is going to be a percentage of the amount due multiplied by the number of days it's late. I mean, the IRS even gives you a nice little calendar, so you can tell if your payment was due on this day and you paid it on this day, exactly how many days you were late, and you can figure out this penalty. Okay. So it's different for everybody. It's not like it's a flat fee or anything. So, what it boils down to is this, the numbers for you to keep in mind. For my home business owners, Schedule C filers, if you owe more than $1,000, then you're probably going to have estimated tax payments for the coming year. Get ready to pay at least $250 4 times a year to the IRS. For my folks that have S corporations and C corporations, $500 or more, get ready to send a check 4 times a year to the IRS. For my folks who continually owe, especially more than $1,000 a year, be ready for the IRS to have you pay estimated tax payments throughout the year, 4 times a year. Don't be late. Okay. So if you and sometimes you don't know. And listen, it changes. Okay. It really does change. So if throughout the year, so let's say your income was really great, 1 year, right? If it's really great, it's up there and you just had a bang out year, great. And then the next year when you're making these estimated tax payments, then all of a sudden your income isn't what it was. You can contact the IRS, show them your income, your expenses, as well as your deductions, and then they can make adjustments to your estimated tax payments. So you're not stuck there, but you need to contact the IRS if that changes. So if you make $250,000 1 year and then the next year you make $100,000, okay, my goodness, your income is cut in half, then your tax liability is going to be different. So you can reach out to the IRS and say, hey, here I am first quarter. Last year I made this year I'm making this, and then they can adjust your estimated tax payments according to what you're making at the time. Okay. So, that's it, guys, with estimated tax payments. They ain't cute. So no, where business owners, we love to say, oh, we don't have any taxes taken out our check. No, we don't have taxes taken out our check. But if you owe the IRS, you're going to send a check whether you like it or not. So, we're not business owners, let me laugh. Hold on, my nose is itching. Let me laugh for just a moment, okay? Because, business owners love to say, okay, well, I'm a business owner. I don't have taxes taken out of my check. Okay, well, that's cute. All right. But at the same time, you're going to have to send a check to the IRS under your own volition. Okay. And if you don't, you're going to be penalized for it. So even though, W-2 earners are, that have a job or having taxes taken out of their check, you have to discipline yourself to take taxes out of your income to set aside that money so that you can pay the IRS. Okay. That's the only difference. Okay. So don't get it twisted and, and feel like we just got some bonus. No. Okay. No. And the only way, and to answer the question, like most people, want to know, how do business owners get tax refunds? The only way, there are two ways for business owners to get tax refunds. You either overpay your taxes during your estimated tax period, or you operate at a major loss, which you can only do for so long. Okay. And neither of which you want to do. That's how you do it. You don't want to overpay your taxes because that's money that's coming out of your pocket. And you definitely don't want to depend on operating at a loss because then you ain't making no money. What? Who does that? So, that's the deal on estimated tax payments. If you got any tax questions, make sure you comment and, I definitely get back to you. And if it's something worth making a show about, I most certainly will do that. Make sure you subscribe so you don't miss anything. Like I said, I also load this on my YouTube channel. So if you're watching on YouTube, thank you very much. Make sure you subscribe so you don't miss anything either. Okay. So that's it for me. Thanks a lot, guys. I'll see you next time. Bye.